Hey YouTube, just wanted to cover some things with you today, some money moves that I made in real estate, in crypto, and in stocks this last 2 or 3 weeks. There were some things we were waiting for the right opportunity to buy and to allocate some money to, and a few of those occurred this week. One on a large scale, one with a 1031. Um, if you'd like to hear about these type things, then like and subscribe this video down below so YouTube will notify you when they come up. And let's get into this. So first I wanted to cover real estate. Previously I had covered the fact that I was in the middle of a 1031 exchange. I had sold a house. I had bought one house. I still had some money in the exchange because the value of the house you bought has to encompass or exceed that value of the house you sold in order for the entire tax gain to be deferred in the exchange. And what an exchange is really allowing you to do is swap properties, but you can do it in technical ways with LLCs, and there's just basically through a title company, a company that they would get a hold of or they refer you to, and this company sets up an LLC temporarily to hold the property until you buy the other one, and that defers the taxes. And so that was one thing I was working on. The second thing we're going to talk about is what a mortgage would look like if we did a mortgage on this house. The third thing is some Solana staking that I did this last few weeks, and a stock. Now, as you know, we were looking for Home Depot, Pepsi, Walmart, and VIG to buy those in the stock market, and although they say everything's down and the stock market's really crazy, it's really not that low. It really hasn't got down to the price it was at the beginning of 2001 yet, but it did for one stock this week, and so I'll cover that also. So on a new house contract, this house is probably rented for about $1,000 a month, which is under market value, and that is fairly normal because market value for rents have been going up, and if you have renters that have been there 2 or 3 years, then you don't bump rents, just not because you can't, but mainly because you don't want to give people that hardship. And so it's more of a consideration. If you have someone who's a good renter, not damaging the property, things like that, you generally would just bump a little bit if you do at all, and that little bit would be what's required by taxes and insurance. And once that renter moves out, then you might do an upgrade. And so here's what that looks like. So rent today would be $1,000 minus $100 a month for property management, we'll say. Fair market is probably $1,600. So if they move out, this is what it will bump to. And if we do some upgrades like granite countertops and things, this is what it would look like as far as that rent's concerned. The advantage of real estate is if I had cash, I sit on that cash, I'm going to lose 7% a year on that cash. So you're talking about maybe $20,000 a year I'm going to lose on this cash. And that's real. You don't see it, but it is real loss of money. And $20,000 a year is a significant amount of money. I take that cash and I put it into a property. That property is generally going to stay level with inflation, if not appreciate some. And so it holds its value with inflation. I have a private sale, which means I can look at the value of the property based on price sales over the last year and not have to contend with the current market momentum when I'm setting a price. And so your price maybe 10 months ago might be lower and today, and you might average those to find the value of the property. But if you look and put it in the open market, you might get a bidding war. It might go for $40,000 higher. So I need a little bit of a room there between the price of the property and what I'm buying it for in order to do the sale. $10,000 in taxes deferred additionally from before, and that's an advantage. Now, if I was going to do a mortgage, we'll say, here's how a mortgage looks like. If you got a mortgage for the amount of this house, you're looking at $1,500 a month payment. Now, if you separate the house purchase up here from the mortgage, it allows you to give a clearer view of what the mortgage does versus what the house does, and that allows you to make better decisions. So you have $1,500 a month, you have $18,000 a month, but the interesting of this $18,000 is the $18,000 is not profit or loss; it is cash flow. And so only a portion of that is actually interest. The other portion goes into the property. And so you have to understand that. Now, inflation is running about 7%. The effect of inflation on this mortgage would be the same as an additional profit of $1,500 per month. So the mortgage amount value goes down by $1,500 every single month due to inflation, that it decreases the value of the money that you borrowed. Okay, so this is a real profit in addition that you can make by mortgaging this house versus carrying this house in cash. Okay, so you look at right now in this market, you're looking at the fact that you have 18,000 here of profit from inflation from borrow the money, plus you have, this 18,000 if you have it to fair market value. This will happen in maybe a couple of years, or this now. And so in order to do that, you're going to look at risks, but you need to understand what the numbers look like. Okay, so the numbers tell you why you would do something. The risk tells you what really could happen and how can you plan for those situations. So number one risk is there's a negative cash flow. Okay, you have a $1,500 a month mortgage, you have a $900 a month income. Okay, so you got $600 a month in negative cash flow at the start if you do it this way. How do you cover $600 a month? Well, you could have built up and cover it with dividends. You could have built up and have other houses that are doing a positive cash flow. There's several ways you could cover cash flow risk or negative cash flow, but you would have had been prepared to assume that negative cash flow. Otherwise, you can't get this additional $18,200. You have to save for the whole house. Second is interest rate risk. Your interest rate here on a commercial loan is going to be, about 3.8% to 4%, and it's probably going to be fixed for about 5 years. After 5 years, then the rate could adjust. So you need to understand how much money you have outstanding in debt at that adjustment and what that could cost you and how you would plan for that risk. The last one is the risk of default, the risk that the house doesn't rent, the market area changes, and you can't pay the mortgage, right? Those are real risks. But the best way to cover risks on something like this is with profit. So if you have another business that kicks out $500 a month in profit or $100 a month in profit, even $100 a month in profit, if you look at your negative cash flow of $600, that knocks it down to $500. So if you have another source of income of $600 a month that can cover that cash flow, then you cover your negative risk with, a stock you invested in or a crypto investment or something. And, this net thing may be $18,200 and your risks are then covered by other investments. Now, I'm looking at a new 1031 exchange because when I buy this house, a certain amount of the money, maybe 25%, will cover the taxes, the money left in this existing 1031, but the additional amount can be rolled into a reverse 1031, and I'm looking at selling a different house that has some repair risks in it to cover that, and if I did this, I wouldn't pay taxes when I sold that house. Crypto investments, I did a few smaller moves. I transferred some Bitcoin and staked it for 30 days on Nexo, earning 5%. That's going to create $46.67 per month based on the value of Bitcoin when I transferred. And I also did some Solana transfer from Coinbase Pro to Solana, and I did an MSOL staking. Now, MSOL is basically a derivative, that's the word, on Solana. So if you take Solana and you stake it, it takes a couple days to pull it in and out of the staking process. So what they do is there's a company that issues a crypto called MSOL, and then the MSOL tracks the Solana. So you own MSOL, but you can buy and sell the MSOL, okay? And it represents the Solana ownership. And so I just tried that because it has two components, which is the staking amount you make and then a small interest on the MSOL itself. So I tried some of that, and that'll make $46 and that'll make $33.05 per month. Lastly, the biggest move I made this month is you knew we were looking for some of these stocks: Home Depot, Pepsi, Walmart, BIG, and I really wasn't at the point I wanted to put a bunch of money in there because they weren't even below the 2021 prices. And so I was looking for Home Depot around the 330 range. And this week they had a profit announcement, and their costs went up. Well, everybody's costs going up. Inflation's high, right? Great company. 1 quarter costs go up. The stock market drops it down to 317. Okay, blown away. My price target where I was going to buy it, and so I bought a lot of shares, 180 shares in different places that I had cash, mostly IRAs and things like that. And so that'll create $1,368 per year in dividends across those different places. It pays about a 2% dividend, we'll say, and then create the growth of Home Depot stock in those places. I just wanted to share with you the money moves I made up to yesterday. Going forward, end of March, I'll close the house. Probably start a sale on another house in a 1031 exchange. And I'm looking to acquire some more Bitcoin, build up my cash position, and make a decision on what to do regarding debt on this property and how to approach that, whether to accept these risks and take the 18,002 on inflation, or to just have this not have the mortgage on it and push forward as it is. But like and subscribe to the video down below. If you want a video on something certain, put that in comments, and I'll talk to y'all later.